area, see if it holds. If it holds, then like I said, we are going to move higher, but the signal is certainly not clear to start the week. Now going to our next pair, we're looking at the Australia, New Zealand. I'm not going to spend much time on the crosses, as you know, but right now we've got a critical level of support coming into play on the Australia, New Zealand dollar at 125.98. We have a sell signal beginning to form here. It's not complete yet, but it's certainly, the 18-day predicted moving average from Vantage Point is certainly under pressure. Now, I do feel that the Aussie dollar is going to be somewhat stronger than the New Zealand dollar. I suspect this area will probably hold, and then we could move higher. Now, the one thing with the Australia-New Zealand currency pair is highly correlated to the equity markets. Now, with that correlation, if the S&P 500 and the global indices continue to move lower, then the reality is Australia-New Zealand is probably going to break through this 125 area, 125.98 area very easily. So shorts carry the edge here. Even though we still have the crossover from Vantage Point, if the equities, again, a driving factor in the markets, as is the commodities, Australia, New Zealand likely to break through the 125 area in the coming weeks ahead. Now going into the Euro Swiss franc, we can see that this pair again has been running flat for an extended period of time. It's broken through that range. We're now starting to see some relief here, a bit of a relief rally, but it did push its way all the way down to 146.36, which is outlined here. That certainly suggests that the downtrend is still in play, but only a sustained break of this area, 147.62, will see this pair reverse and start moving higher. And it just appears very unlikely at the current time given the state of the euro. So again, shorts still favored here, but if we can get a reversal above this 147.62, a sustained break above this level, then the pressure should be off the downside on Euro Swiss franc in the short term. Now looking at the US-Japan currency pair, we're going to spend a bit of time on this one. It's certainly an interesting pair this week. We've managed to get in on those short positions. We can see that we have this one lone candlestick has moved up above the 18-day predicted moving average, but then subsequently crashed all the way down into the 89.15, 89.20 area. Now looking at this chart here, we can see that we had a buy signal here at the beginning of December, which was then followed up at the beginning of January by a sell signal. So again, we're looking at price patterns here. We're seeing these patterns happening at the beginning of each month and the end of the previous month. So it's very important to take these notes. You can see it here again on November the 2nd. We got to move to the downside. The crossover from Vantage Point again took place, in the upside crossover took place in the 1st of December. Then we've got this thing here again crossing over to the downside, which again is you know, taking place at the end of the month. So this suggests that US-Japan could move higher based on these price patterns, but again we have to for now I think stay with this move. 90.66 becomes a major area. We've closed at 90.26, so the 18-day predicted moving average from Vantage Point is already under pressure, suggesting that US-Japan could reverse. Now again, the global equity play here, it seems unlikely that the US-Japan is going to move higher because the yen is likely to gain considerable strength on the crosses. So which will again put considerable pressure, downward pressure on US-Japan. So to begin the week, we're going to be watching the 90.66 area very closely. However, I suspect that between 90.66 and the 91 area that this will hold, and US-Japan is probably going to move lower back down to test that 88.50 level. But again, equities driving factor on this pair. Euro British Pound, I'm not going to spend very much time on this. We can see we're in a very clear downtrend here. It's trying to move back up, but it's in short, the market is unable to even get through the predicted 8-day moving average from Vantage Point. We can see here we have two lone candlesticks come up, touch the predicted 8-day moving average, predicted moving average from Vantage Point, only to subsequently crash all the way back down into the 86 level. So clearly we have a number of sellers up there, and again, the euro getting beat up pretty bad here on the crosses too, but we're also, in my opinion, this thing is pretty heavily oversold, but it does have room to extend. Now looking at the Euro US dollar, again I'm going to spend a little more time with this. We have a bit of a gap to be concerned with here. We've closed at 138.64. The gap I'm referring to is between where the current market is now and the predicted 18-day moving average from Vantage Point, which sits currently at 142.02. Now that gap is substantial. This pair screams for a retracement, so we're going to be watching these areas very closely. We've closed here 138.64. The first test will be 139.53. I anticipate the euro is going to come under heavy pressure, selling pressure again Sunday night. But once that abates, we're probably going to move towards the 140.68 area. We'll see how it goes there. Or it may just continue to be sold off aggressively as people pour in there to buy US dollars. It's certainly worth pointing out how amazing the sentiment can change. That the US dollar was basically bordering on worthless just a couple of months ago, and now it's the hottest currency in there. So that's the market for you though. So but the main thing right now is that 142.02, only a sustained break of this area will take the pressure off the downside, and we have some very strong downward pressure here. Now predicted TSI from Vantage Point, it's running in oversold territory. Predicted RSI also oversold. However, the predicted MACD is not, so we do have room to extend lower. Now looking at the New Zealand US dollar, New Zealand and Australia, the two charts are going to look identical. We're in a very clear sell here. But we've also got some support down here forming up in this 69.80, 70 area. There's a considerable amount of support here. We're also clearly oversold on this thing, as we can see the predicted MACD is moving down to the zero line, as is the predicted RSI, as is the predicted TSI. So a number of different things happening, but we've got a very to be honest, a substantial gap on this currency pair also. We've closed at 70.10. However, predicted 18-day moving average at 71.87, so we're looking at almost a 200-point gap there, which is fairly large for New Zealand US dollar, just to point that out. But to begin the week, again, only a sustained break of the 71.78 area will take the pressure off the downside. But we do have this support down here, so if we can get through the 70 area, 69.80 area, and stay below there, then we're probably going to be heading towards that 66, 65 area, back down into that range again on the New Zealand US dollar before we get a substantial bounce. But again, that's left to be seen. Right now we're already in oversold territory, so it'll just be a question of whether they can push it lower below the 70-cent mark. Now looking at the Australia US dollar, this crossover here on the Australia US dollar is somewhat fresher than the New Zealand. Australia just now starting to come under pressure. Point of interest here, 90.57 is a key area, 90.02 and 89.23. These are our three current levels of